Here are the 5 big announcements you need to know from today's autumn statement. Firstly, insurance premium tax is going to be hiked to 12.5% from next April. That could cost you another £50 in your annual insurance bills, so you need to be sure that you switch every single time your insurance policy comes to an end, otherwise you really could end up paying through the nose. There's going to be a new savings bond launched by the government next year. That's going to be available through NS&I. It's going to pay you 2.2%, which may sound like a great deal when you look at all the other depressed savings rates around, but you will need to lock up your cash for the next 3 years. And that could actually mean you shoot yourself in the foot, because if inflation continues to rise as it's expected to, it could be nearer 3% by the end of next year. So your cash could actually be losing value over time, and you might even be penalised if you try to get it out. Good news for renters, letting agents' fees are going to be scrapped from next April, and that should make it cheaper for you to move home. There is a bit of worry that landlords will simply up the cost of your rent to counteract that move, but we've seen the same happen in Scotland, and landlords haven't put up the cost of rent there dramatically. You're also going to be able to earn more money next year before you pay tax. The personal allowance threshold is going to be increased to £11,500, and the rate at which higher rate threshold kicks in is going to be increased too, which should mean that you get to keep more of your hard-earned cash. The government are also rolling back on some of their controversial welfare cuts that have come in the last year, and that should mean that if you claim some benefits and also work, you get to keep more of your money. If you're not sure how the changes are going to impact you, then it's really worth speaking to someone at Citizens Advice Bureau, because they should help you to understand what it means. Those are the major changes, but for more information, check out our blog on money.co.uk.